Welcome to If Prices Could Talk, the podcast where we dive into the art and science of pricing, sales, and negotiation. I'm your host, Tracy Dent. Join me as we explore strategies and current events shaping the future of pricing power in B2B, featuring insights from industry leaders and subject matter experts. Let's jump into today's conversation.
What's amazing to me is the appetite for like the 3-hour podcast. I listen to them, that's crazy.
It is. It is. And we're surprised, ours are mostly around 40 minutes or so. And there's some people that do these like short abbreviated, and we've tried that, but usually it helps to kind of be able to settle in and talk about like unpack a lot of the things. We were thinking for today, well, let me say this out loud for people that are listening and not watching on video. Patrick and I are here with Randy Kobat. Randy is the Chief Commercial Officer at LotLinks. We thought that there were kind of a few threads we could go down together. One is sort of yesteryear and the projects that you did with Holden Advisors around 2021, 22. And then I've been doing, and I'm sure Patrick has too, been doing a little research on LotLinks and what you've created there and just what's going on with the company in the auto industry now. And then everything kind of flows from those two conversations. So we thought we could take a trip down memory lane first, if that's okay with you.
Sure, that'd be great. My first experience working with Reed was back when it was the strategic pricing group, and we hired them to do a project for us on a CRM software system for automotive, and that was probably in 2000 or 2001.
Yeah, way back.
What was interesting was, at least back when I first entered into the automotive technology space in early 2000, late 99, early 2000. So I'm ancient. And that's, if you want to do the math, is it typically automotive technology was 5 years behind any other industry. So at the time, while things like Siebel systems were blowing up as customer relationship management software and many other markets, it was just beginning to happen in automotive. And what we couldn't understand was we were selling an entire ERP system to a car dealership with 40 applications that managed everything from parts inventory to car inventory to the service department to the finance department. And we weren't getting as much per month in recurring revenue as these new CRM systems were. And so we hired the strategic pricing group and Reed to help us figure it out and do an economic value analysis around the value delivered for this customer relationship management system for a car dealership.
Blast from the past with EVE, right? An economic value analysis or estimation that still persists today, Randy, right?
Yeah. I think, and that was extremely valuable for us. And the thing, the kind of nuance about it that I loved as I've continued to lead sales teams is the negative economic impact of things that you don't do that the competition does that you have to account for. And it really creates a great level of transparency and honesty between the prospect and the sales team, that you're willing to have that conversation about things that the competition actually does better, but net, we're going to be much more valuable to you than the competition because of the overall value we deliver.
And so how have you kind of taken that through the last few roles that you've had? Can you talk us through some examples?
Yeah, I mean, I think in grad school, I kind of became a pricing nerd. I took a pricing strategies class back getting my MBA, and the strategy and tactics of pricing by Nagel and Reed it was the textbook that we used. And what I found really frustrating was it was really hard to figure out what the value of a Pop-Tart was. But what is really important is understanding the value that you deliver for software, because the gross margin on your next customer is essentially 100%. So cost plus is meaningless. And so really understanding the value that you deliver through the solution that you're selling to at least in our world for software to the car dealership, is essential and critical, so that we can make sure that we're getting the fair percentage of the value we're helping create in that relationship.
Yeah. So when you were at Kelley Blue Book at that time, part of what the project was to sort of lay out and create or update the good, better, best model and
Mm-hmm.
how that went to market. Can you tell us a little bit about that?
Yeah, it was the typical dilemma that I've seen elsewhere, where it was unlimited value at a fixed price.
Mm.
And it was evident to me right away when I inherited that business and began to lead that business. And, just for the listeners, Kelley Blue Book is I don't even know now, over 100-year-old brand and has a lot of trust with consumers researching the car that they're going to buy. And we did an extension of that brand into a product called Instant Cash Offer. So if you're a consumer shopping for a new car, part of that process typically includes trading in your old car. And so helping the consumer understand how much their current car is worth and how much they're going to get in on trade for that car is an essential part of the process. So we created, there's a lot of different names for it, two-sided marketplace, directed search, a solution where the consumer could get a guaranteed cash offer from Kelley Blue Book on our website by having the consumer go through a series of questions. And then we would connect that consumer to 2 or 3 dealerships that were close to them in geography that might have the new car they're shopping for on their lot. And those dealers through our program were required to accept the guaranteed cash offer, whatever number we put on the car. So it created some more certainty around the financial transaction for the consumer. What existed when I inherited that business was a dealership in a specific geography having connections with 700 or 800 consumers in a given month. And so that was where the unlimited value was coming in, because we had weird rules around how many dealerships we could sell to in a geography, or how many dealerships could compete against each other with similar brands, like a Ford dealer and another Ford dealer. And we had to really rethink all of that in order to be able to grow the business. And we had plenty of consumers showing up naturally to the Kelley Blue Book website, over 40 million a month. And we needed to build up the other side of the network, which is the number of dealerships that would honor the program and were the ones paying us for these consumer connections. And so 2021 was a really interesting time in automotive because, not to belabor it, but it was the pandemic.
Yeah.
And during the course of 2021 and 2022 and half of 2020, we under manufactured new cars to the tune of 8 or 9 million units. So if anybody was in the market for a new car back then, you couldn't get them. So used cars became really the lifeline for car dealerships to be able to stay in business. They had to sell as many used cars as they possibly could. And the typical source for used cars for a car dealership is buying them at auction via wholesale auctions, or the trade-in process, randomly shopping on consumers that post their own car on Facebook or Craigslist. Really wasn't something that was done a lot back then. It's a big deal now because of what happened during the pandemic. So we had a ton of wind at our back because of the need for good quality used cars. And that's what Kelley Blue Book Instant Cash Offer did, was help the dealer acquire good quality used cars at a good price.
Yeah. And I think that intersection, right? You mentioned creating an ecosystem or a marketplace, right? I'm using different words. That created one of the most valuable scenarios for Kelley Blue Book, right? When you have limited supply and this increased demand, that
Yep.
marketplace, the value was almost exponential. But how do you price for that value, right? And how do you capture that with your customers? What was the thought process in going in and negotiating with the dealers around this instant cash offer segment of Kelley Blue Book?
Yeah, it goes back to having them pay for the value that we were delivering. So we created tiers around the number of consumer connections we would create for them every month. So rather than having one dealership getting 800 consumer connections, which quite frankly, a lot of those were falling by the wayside because the dealer didn't have the time or the people in the store to follow up on 800 consumer connections in a month. So we created tiered packages with the help of you guys to help us really price the value we were delivering in the number of good quality used cars they were going to be able to acquire through those consumer connections. And we stopped selling leads and we started selling inventory of used cars.
Yeah, it was such an interesting project, Randy, because the amount of value that you're providing with a product like Instant Cash Offer will actually change depending on what the market conditions are. So a company like KBB, when you were leading that initiative, Randy, how did you think about capturing the value of Instant Cash Offer in 2021 versus setting up a structure that would grow and adapt or change over time based on market conditions?
Yeah. Yeah, we knew that the gross profit that a dealer was making on a used car was inflated at the time.
Mhm.
So rather than using that as a heuristic to, if you acquire 5 cars through instant cash offer in a month, it's equal to X, we used more historical numbers rather than what dealers were actually making from a gross profit per unit retailed perspective. And built the value that we created around historical numbers rather than current numbers. And it's held true, even to today.
Yeah, because I think we can price in inflation, right? There's plenty of statistics to say that the average growth rate over a 10-year period will be X and account for
Mhm.
that. But all too often, we find our clients want to capture fire when they have it, right? How do we
Mhm.
bottle this tremendous market condition that we have? And oftentimes we advise them, you can do that, but create a structure where you can go back to more of a steady state average over time because
Mhm.
markets are dynamic. They change and they're changing more rapidly than ever before. So if you want to catch lightning in a bottle or fire in a bottle, as they say, you want to be able to do that in a flexible structure that allows you to adapt when market conditions come down as well.
Yeah. Yeah, I think that's the ploy that a lot of dealerships leaned on during that time and even today is for really hot cars. You're going to pay over the MSRP price today, even today for some year make for some makes and models. So and it creates a lot of bad emotional disconnects with the consumers, quite frankly.
It does.
Mhm.
It
It
does.
is kind of like when a lot of times where we get into early conversations with people, like people's heads go to car dealerships or used car salesmen or whatever is like almost the
Mhm.
immediate thought that people have, and almost everyone has some experience of that.
And
Um,
typically it's bad.
and typically it's bad. Yeah, exactly. And I think a lot of these projects, the in every project, like the umbrella intent is how do you have the pricing be fair?
Mhm.
And have people have an experience that it's fair and see why, and the logic is clear and simple and all of that good stuff.
It's really
Yeah.
fascinating as I've become a student of the car business. I've never actually worked in a dealership, but I've been in automotive technology and working with dealerships for 25 years now. Um, Buying a car is actually a series of 3 transactions. You have, as I mentioned, your trade-in. You have how much you're going to pay for the new car, whether that's new or used. And then you have the financing. How much is my loan payment going to be? And astute consumers think about it as 3 transactions. Most consumers think about it as buying a new car. And dealerships are brilliant at negotiating. I think they probably read
Mhm.
or wrote the book Backbone with Reed. And so that's what we're up against as a salesperson selling to a dealership is, master's degrees in negotiation. And they use give to get all the time, right? They might pay a little bit more on the trade-in, but, take a little bit off the price of the new car. They might get a little bit more margin if they finance you through this bank versus that bank. And they use give to get all the time. And so as we were selling Kelley Blue Book Instant Cash Offer and the other businesses that I led, give to get really resonated with our sales team and quite frankly with the clients because they saw it coming a mile away, but they knew that they did it and it worked. And so it made a lot of sense to them.
Yeah.
That was a very interesting dynamic with this project is that instant cash offer has always been valuable, right? That value shifts over time with market conditions. But the fact that instant cash offer was undervalued or had a rigid pricing structure when it really needed to be priced to value, it wasn't as if you weren't charging for instant cash offer as a product or a service. You were charging for it, but
Right.
it seemed like over time, it was death by a thousand paper cuts, right? Each negotiation with each new dealership just eroded the price of instant cash offer slowly over time. And it almost slides under the radar unless you have the right diagnostics or analysis to look into it, or you have a big macro event which puts a spotlight on it, right?
Yep. Right.
And so when you think about all of your experience, Randy, it doesn't need to be limited to KBB, but how do you think about tracking these key metrics and how do you keep pricing and the relevant pricing metrics front and center as you're managing multiple product lines, lots of different features and benefits and different services?
Yeah, I always am cognizant of, especially in a SaaS business, recurring revenue, where a customer can fire you at any time if they're not perceiving that they're getting value from the solution, that it's critical to make sure that your value delivered is the right percentage of the price that you charge and is reflected in the price that you charge. And so I always am interested because in order to keep that customer satisfied and continuing to have a relationship with you, you need to continue to add additional value over time with new feature functionality and new capabilities for the existing platform. Sometimes it's important if the price appears to be higher than the value that the customer is getting, where you would add features without charging additional for those. Other times, there's a good relationship between price and value, and you have the opportunity by adding additional feature functionality to raise the price or sell it as an add-on solution to the base product. So that's constantly happening year over year, quarter over quarter, as you're working with the product and engineering teams to bring new feature functionality to market.
I'm wondering, as you're sort of walking us through this example, are there standout moments like memories, especially as you started to bring things to market, sellers started to get momentum? Tell us about some of those memories and things that stand out to you as you look back on the project.
Yeah, I mean, I think at the end of the day, over a 3-year period, 2021 to end of 2023, we grew the instant cash offer business from about 80 million to about 280 million. And that was one of the fastest growing businesses that I was a part of. And it was, a lot to do with the market conditions, but it was also a factor of, pricing the product to value and being able to open up opportunities by tiering the offering amount around the number of consumer connections that we could make. And so, yeah, it was a great experience for myself and my team to lead a business through that kind of explosive growth over such a short time.
Yeah, it's
Super
amazing.
exciting.
Yeah, we
Yeah.
love those numbers. But it's a great example of when you calibrate or align price and value, and you have the right offer structure to engage with your customers over time as they grow, right? You have these great market conditions, but as they grow, you can grow with them. And I think that's really the story behind instant cash offer. The market conditions are great and you had this really unique scenario, but you were able to design the right offering structure to align with customers. And we often talk about, Randy, fair pricing, right? That's fair pricing. You're
Yes.
growing with your customers. As they profit, you profit as well. And in the way in which you're helping them monetize their own products and services.
Yep.
When we talk about profit time and the shift from provisions, I believe is the name of the legacy
Yeah, provision.
platform,
Yep.
provision, and you're shifting over to profit time, the amount of perceived value or quantified value that we could see was immense, right? The shift to profit time was huge, offered so much extra value for dealerships. But thinking about the market conditions, almost in the exact inverse of the instant cash offer product, dealerships didn't always see the benefits of the complete suite of profit time because inventory was so low and demand was so high that they were blowing through their inventory quickly. Turnover was at a tremendous clip. And so a lot of the inventory management and other services provided by this other platform actually were downplayed, maybe not realized at all at dealerships. So can you compare and contrast a little bit and talk about profit time and the launch of profit time?
Yeah, that was a real challenging project because we profit time and provision, as you mentioned, were the market leading inventory management software products for car dealerships, primarily for used cars, but also for new cars as well. And what's interesting about the category of inventory management in automotive is it's different than how you might think about inventory management in other industries. The way I think about inventory management outside of automotive, it's having the right asset at the right location at the right time, right? Really, in automotive inventory management, the category of software is defined more around the 4 Ps of marketing. So helping me price my cars effectively, helping me market my cars effectively, promoting the product by distributing photos and descriptions to the various websites where consumers shop, whether that's Auto Trader or Car Gurus or Cars.com. And so the product provision had 60% market share. And it was all around having the best product in the marketplace with the right philosophy on how you should manage your inventory for maximum total gross profit. And to your point, it was all around increasing the number of turns in your inventory every month versus maximizing your gross profit on each unit retailed. And so sometimes you would make a little bit less on a used car, but you would be turning and selling more cars, so your overall gross profit in your used car department would be higher. That philosophy, as we got smarter and were able to leverage machine learning and AI, really helped us identify that we could help dealers price cars more effectively if we segmented their inventory by prospected turn rates. So we know that there's a lot more shopper demand for some cars than others in a specific geography. And so you don't necessarily have to be as aggressive from a pricing perspective to move that car quickly. And so the whole theory behind Profit Time was that we're going to help you segment your inventory, price to the value for that car more effectively, and help you increase your gross profit that way. So a lot of the challenge in the migration was the fact that we taught the market that there was the best way to turn your inventory was to price aggressively and turn it faster. And now we were telling them that your inventory is really like cogs in a wheel, and some cogs are smaller and go faster, and some cogs are bigger and go slower. And so you're going to have different turn rates for different segments of inventory. And so we needed to convey that not only in telling our marketing story, but then how we price the product as well. And we saw significant improvement in gross profit for the dealership by using Profit Time versus using the old product. And we had to price the product accordingly. So we priced it as a premium product with the help that you guys gave us. And we slowly transitioned our installed base over time.
Mm-hmm. But it's interesting, right? Because if you're trying to train them on a different mechanism of looking at inventory turnover, if inventory turnover is at all-time highs, it's really hard to get the customer's attention.
Yeah.
So I think the implementation around profit time was so important. Can you talk a little bit about now changing company behavior, changing seller behavior? Because
Hmm.
I think all of our clients underestimate how difficult it actually is to truly change seller behavior and
Yeah.
incentivize the right actions by the sales team at the right time.
Sure. I mean, I've always been focused on really good customer feedback, whether that's net promoter score or the other ways that you're able to really understand how your customer perceives you. Um, and so really understanding the value that we were delivering for the customer from profit time and training our sales team to be able to tell those stories and share the data and the metrics, share customer testimonials so that a dealership can say, yeah, I'm a Ford dealership, and that is a Ford dealership telling me how great this product is. That really resonates really well in the automotive marketplace. And so it was really all around data and metrics and real customer stories that help shift the sales team and help them prepare to have different conversations with the customers.
As you see dealers get more digitized and more sophisticated with their technology, how are you seeing things change over time? Like over the last year or so, what changes are you seeing?
The one thing that still bothers me so much in the automotive marketplace is how wonky pricing is on inventory or on cars.
Yeah.
Um, So when it comes to a used car, and you guys are going to cringe, but the way dealerships price their used car is based on how other similar year, make, and model cars are priced online. And so they're making the assumption that Bob, the dealer 2 towns over, knows how to price a car. And so I'm going to price my car the same. Because when
Okay.
consumers search for cars, they're going to search by price and they're going to look
Yeah.
lowest to highest. And if I'm not in that competitive set and close in pricing, I'm essentially not for sale because 98% of consumers start online and
Hmm.
typically at one of the marketplaces like AutoTrader. And so if I could do anything and wave a magic wand, it would be to help dealerships get more sophisticated around consumer demand and value created from this good quality used car. And then on the new car side, there's all kinds of constraints from the car manufacturers on what the MSRP is and incentives and rebates and how those factor into what the ultimate price is that you're going to pay. So it's highly complicated. And so even today, with the advent of sophisticated technology, the majority of dealerships are still pricing, and where I was at the inventory management software product, we created the market metric called price to market. Are you 100% compared to the competition? Are you 98%? Are you 120%? And so that's still today how they're pricing cars. And it's such a critical lever that dealers hold on to with all their might that I don't think they'll ever turn it over to AI to price strategically.
Hmm.
Will you tell us a little bit about lot links and what you're doing there? I was doing a little bit of research, just the concept, at least what I saw, it was sort of like LLM for dealers. So
Mhm.
can you tell us, or people listening, just a little bit about what lot links does and what you work on?
Yeah, sure. LotLinks is a software product that is really focused on helping dealers understand their inventory health at any given time and really understand the risk associated with any car on their lot. Is it going to be a fast mover or a slow mover? And then also understanding the marketing spend that they're doing today. And are they wasting marketing spend on some cars and not putting enough marketing spend on other cars? So we really bring to bear all the understanding of market demand for a specific type of car, as well as consumer demand of how many really in-market shoppers are looking for a car like the ones that a dealer has on their lot at any given time. And we marry those pieces of data together along with digital marketing technology that allows a dealership to get a low funnel shopper exposed to their specific car at the right time in the consumer's buyer's journey.
Very cool. Very cool. What drew you to the company, or how did you get connected with this role?
I've known the founder for a long time,
Okay.
and we've always stayed in touch, and got a lot of admiration for him. And when I was looking for my next thing to do, he kind of tapped me on the shoulder and said, "Why don't you come help me grow this thing faster?" So that's why I'm here today. I've been here
Yeah.
for a few months.
Seems like such a cool product. Like just thinking about, at least in my experience of car dealerships, where historically you've got a lot of sales rep driven, relationship driven, negotiation heavy environments, and now they're becoming more data driven, algorithmically priced. People are doing their own, research online, digitally marketed kind of TikTok. You can go online, even if you just go into TikTok and people are like, here's exactly how you get the kind of car that you want. Here's how you
Yep.
negotiate. There's so many opinions out there for how to kind of cut through the old historic ways of, doing these negotiations. So it's interesting as these things are evolving, you're sort of at the forefront of how they're, being driven by a different mechanism and just a totally different environment. It's extremely cool.
Yeah, there's a lot of options for a dealer to do, broad channel marketing, spray and pray, Google, Facebook, the marketplaces, like I mentioned, Auto Trader, but really finding somebody that's already been shopping online for a specific car for 15 hours is kind of how we bring additional value to the marketing mix and exposing your specific car at the right moment when that shopper might be on another website researching the car, and then that specific car shows up at the dealership close to them,
Mm.
is really where we begin to help move the cars faster as well.
Hmm. It's the idea that, right, there's a person out there for every car. There's a car out there for any given person. It's just finding where that person is and making sure
Mhm.
that you create the connection. In terms of like capturing data and being able to better predict, we often talk about price sensitivity and how hard it is in B2B markets. In a more B2C environment, price elasticity is really important, right? And
Mhm.
it not only helps you match up the person to their dream car, but it also helps you begin to determine what their willingness to pay for that car may be.
Mhm.
So how whether it's included in the product now or not, Randy, as you think about your ability to impact price for the
Mhm.
vehicle, is it
Mhm.
just about connecting the buyer and the car, or is it also helping to maintain that a higher price point in market?
Yeah, I think as I shared, dealerships, when they want to get more clicks on their cars on their website, they're 89% of the time, we just did some market research, their first move is to lower the price.
Got it.
And what LotLinks allows them to do is to expose the car to the right shopper at the right time rather than pull the price lever to get more eyeballs on that car. And so the research that we've done, our customers are making $500 on average more in gross profit on the cars that they expose through LotLink's marketing platform than pulling the pricing lever to get more clicks through Auto Trader or Google, et cetera.
And think about that multiplier effect, right? As I'm sure you have, $500 on every car. Well, as you get up there in your volumes, that's a lot of money that's being
Yeah, a lot
saved.
of our dealerships have 100, 200, and 300 cars on their lot at any given time, and they're selling them every month. So, yeah, 300 times 500 is a pretty good ROI.
Hmm. For sure.
Excellent. All right, we have a few negotiation questions. This is like my favorite. This is my speed round that we do with everybody that
Okay.
comes on the podcast. um, which is, let me start with what's one negotiation myth that you've heard that you wish would go away?
Our price is too high.
Yeah,
Especially in automotive,
yeah,
in working with car dealers, your price is always too high. And I think that, the give to get really helps there. I've been successful in multiple companies that I've ran to really improve the percent of list price that we're able to hold through the sales process.
yeah.
Do you ever call out the dealers directly on them using the same tactics with their customers that they're using with you as a supplier?
Oh, absolutely. We laugh about it. Yeah. Yeah. I try to sell them floor mats and clear coat as well.
Exactly.
Hmm.
What about like just a memorable negotiation? It could be earlier in your career, it could be something from the last few years, but a negotiation that stands out to you for any reason.
I think what's interesting is the buying teams continue to get bigger and bigger. And the one of the recent negotiations that I was a part of was a very large publicly traded dealer group that was interested in the software that my company was providing at the time a couple of years ago. And there were 23 people in the room that were part of the decision-making process. And so I think from a negotiation perspective, it made it extremely impossible to understand what everybody's needs were and how to best position the offering for each person's and department's needs. And to further complicate it, these 23 people had never worked together to make a decision. They're from
Hmm.
disparate parts of the organization. And so it really has increased the complexity as we're in the marketplace trying to win customers over. So this specific example really required us to help all 23 of those people convince them that they were making a high quality, low regret decision. And it was different for each department. And all of that came into play as we were negotiating the final deal, but we were able to win it.
A lot of people.
Yes.
It's a lot of people. It's a lot of like incentives and drivers too, like whether or not people are aware of what's in it for me and what do I care about? How does this make me look in my career? How does it make me
Absolutely.
move me ahead in the company? There's so many different sort of invisible things at play. That many people, it just gets crazy.
Yeah, that's psychology around how is this going to impact me personally,
Yeah.
is many times forgotten or not considered enough from a salesperson as they're working with prospects and trying to help sell new products to them. I've kind of been on both sides of the fence. As I mentioned, that inventory management platform, we had 60% market share. We were like IBM, you don't get fired for buying IBM.
Hmm.
And so many of the dealerships would buy our product just because we were the market leader. So it made it a lot easier. And then I've been on the other side of the fence when you're a nascent startup. You really have to convince people that you have a differentiable value in what you're delivering.
Yeah. Yeah. That's great. Patrick, any other questions, things you want to cover?
No, I think we've covered a lot.
Yeah, this is great. Thank you, Randy.
It's
Great to
been a
spend
lot of
time with
fun.
you.
Yeah, this
Yeah,
is
thank you
great.
for doing this. I really appreciate it. Great to see you,
Absolutely. That's
and
awesome.
hopefully we'll
Thank you.
see you soon.
Cool.
Thank you,
Thanks,
Randy.
Randy.
It's good to see you.
Take care. You
Bye
too.
bye.